Stuck inside these four walls.
Welcome to Insights. I'm Eric. Thanks for stopping by. We're going to be talking about Amazon today. We've made an addition of the corporate or the company matrix. Inside the matrix here, we can see all the new tabs that are available starting at the first of the year. You can see some of the names that we recognize. A few have been added, and we are still considering others as we wrap up the addition and subtraction phase of the company matrix. This is the traditional matrix here, and this probably should be labeled CEO matrix, but we will just leave it at for now. What we're going to do is we're going to focus on Amazon. Amazon is a major bellwether for the U.S. stock market, largely because it's retail driven. It's also a technology company, which it does help. But the retail side of the business, we're going to talk about how that is slowly changing, even though it may not be showing up in Amazon quite yet. But the real concern here is these highlighted red numbers here in the primary trend. The evolution of the trade works exactly the same as it does for other assets inside the matrix that we apply to Amazon. Amazon's been up for 84 months and produced an 855% return over that time period. It's really phenomenal. But what the computer is doing is it's coding this as PTD2, which is a primary trend decline 2. We're in phase 4 because of this number right here, and it's so extended that the price cycle over 84 months is almost 5 standard deviations above the norm. We're going to take a close look at that, but that really trumps over everything that we're going to talk about inside the fractal natures of the trends, which are encompassed by the daily, weekly, and monthly trends. The daily trend is down, which is a little bit concerning too, because this could be the start of an onset of a correction, a consolidation, because we have the 3 time frames that are no longer in upside alignment. But this also could be the beginning that turns the primary trend down. The primary trend's got a lot of work to turn down. It's not going to just turn down next month. It's going to take a large move down, and then there's probably going to be a rally up before then it would roll over again. But it is something that you have to be prepared for, because PTD2 which is primary trend decline, and this is second degree, that's the worst. And Alibaba's in that same phase, except it's primary trend decline 2 for a downtrend. This one is for an uptrend, and it's saying, wait a second, after 84 months, this is due for a breather or a consolidation or a turn. And I think the world is, the majority is lulled into complacency, thinking this thing's never going to come down. And it's easy to embrace that because you've had 84 months to reinforce your opinion. But the cycles are extended, and we're going to talk and see visually what that even looks like. If we look at the price sticks for Amazon, you can see that we've been down for 21 days, and you can see why. The computer's picking up on that. There's the general downtrend. You can't like this. But again, having the daily go down is nothing that you can, generate a primary trend decision making. You can't short Amazon until the primary trend reverses. What we're dealing with in terms of the weekly reversals, if you look at the reversals tab and you pick Amazon and it comes across here, I tend to focus on the weeklies because the daily gives a lot of information. The weekly is more efficient or proficient, I would say. That doesn't give you as much, and the monthly gives you very little data, although this is a significant level when it did jump the creek here at 1600. But we're going to take a look at this. I pulled this over, and the computer is mapping these out. If we zoom in into this chart and come up, we can see we're within a congestion zone. These reversal levels, which the computer finds in supply and demand zones, they're either painted red or they're painted green. Green means they're below and they're supportive. Red means they're above and they provide resistance. We're kind of stuck in the middle. What I would say, though, is if you chew through these lower green bands down here, unless the computer picks up something here, which I'm sure it's not, it's going to fall into an air pocket. And it's that air pocket that we could experience in 2022 where there's nothing to slow it down. It's kind of like sliding with forward momentum in space. There's no friction. There's nothing there. You hit an air pocket, this is going to slide all the way down into this area here before it finds any type of support. And I think the people who play Amazon and who are involved with the stock market, trying to understand the direction of the U.S. economy, they better understand what's taking place here in Amazon. And I hate to say that This could be one of the stocks that you want to keep an eye on, even if you don't like using it as a website to buy and sell things. It certainly is a bellwether for the U.S. economy. So if we lose the lower reversals, and you can go check these on another subscription to the Matrix in 2022, and you can follow all this stuff again. I think these numbers could change, but if we lose a 32 handle on this one, and it's 3,200. I think Amazon's going to be in some trouble, and we're going to see what that really means. And first we have to pin why we're so extended in the first place. Having 5 standard deviation time cycle, well, that doesn't mean a lot. It's what the computer is picking up on is the size and height of this green box. If we pull this down, the height is determined by the price cycle, the BUS, and time is measured by BUST. These are pulled from the matrix in the weekly, or sorry about that, in the monthly trend over here. It's pulled over from right here, and it's just something we can look at. I highlighted this one. This is the concern. The price cycle is, which means the height of this is not overwhelming. It's really the width, and the width is so much bigger than all the other ones. And what you have is after a certain amount of time, everything tires out. Now, I think to properly frame what's taking place in Amazon and how it may affect the overall stock market, everyone who's read or participated in the U.S. stock and economy report, which I've put on sale for $50 until the end of January, because I think it's going to be an extremely important report to understand. Watch that series of videos in order to understand why Amazon could roll over, but it doesn't necessarily mean the stock market in general. The overall stock market is going to collapse. And there's bigger trends and there's bigger things that are taking place, and that's a complicated story, and I don't want to really go into it there because I've already discussed it, and I realize it will cost money for you guys to watch that, but it is probably well worth your time. It will explain some of the things that we're even going to talk about right now. And one of the things I want to address, and we can find inside the matrix, is the intermarket trends for the retail stocks, which is down here in line 80 of the trends tab. I mean, we're in the trends CO tab, but the trends tab, which when you get a subscription, you get both of these now. You can keep an eye on it. You can see we're in a downtrend. So this is a risk off and a bear face for the economy. Now, I know that everyone believes that's going to be a bear face for the stock market, but not necessarily. This right here is a weekly or more intermediate term trend. I've pulled in from my other database that I follow. I have numerous, and this is one of the intermarket trends. This is longer term. This is the stuff that I pull out when I traditionally do a report, but I'm not sure I'm going to be doing a report on Amazon. Perhaps if there's a lot of interest in it. This is the monthly trends. This is the longer term ones, and we can even see that has fallen below zero. There lies the concern. In the past, when the relative performance of the retail stocks starts to significantly underperform the S&P 500, and in general what happens is this oscillator, when it's above zero retail, when it's green and highlighted above zero, the dotted line, this blue line is positive. It highlights these boxes green. That's a bullish phase. That means retail is outperforming. We've now entered a phase where it's in a bearish phase because it's fallen below zero. The stock market is outperforming the retail sector. And in the past, when things were more normal and the traditional, I would say that things are far past normal and do not expect them to return that way. An underperformance of the retail sector saw the stock market eventually roll over. But you can see since about, and this will explain itself more in the U.S. economy and stock market report, which you can find that in the reports tab. I'll leave it underneath the link of this video. Perhaps I will leave it into the text of the post as well. When the retail stocks underperformed the last bear cycle, the stock market just went up anyway. So, and you have to understand why. And I don't want to stretch this out too long because reviews tend to be about 10 minutes, and we're already pushing on the backstop of that already. So I'm going to push on. This one has fallen below zero. So are we going to get a repeat of here where the stock market falls, or are we going to get a repeat where the stock market rallies? The only thing that you can do, and I mean, normally when we look at an asset inside the matrix, especially the trends tab, we follow a concept called energy. Energy plays a vital role of resetting and flipping primary trends up and down. This one, you would need a bearish energy build to flip the trend down, but we don't. It doesn't track. These assets don't track on at the CFTC. They don't have a futures market, so I can't build and construct a normal type of energy that everyone subscribes to and is familiar with. So what we're going to have to do is we're going to have to talk about the Pro Index, which is a bit different. The Pro Index is another way of measuring who's participating within the trend. It's not as quite as accurate and as valuable as energy, but it does show us between the Pro Index here and the public index here who's buying and selling. The Pro Index is actually has been drifting lower for quite some time since we made the high, which means the professionals have been quietly selling fairly aggressively and with a fair bit of tenacity since well, we've had to come down since 2020. And even though the price of the equity, the stock, Amazon, has held into a trading range, eventually what it's going to do is it's going to pressure it. Now, I realize that this downward move here also saw an upward move, but in general, an upward move generally pushes in a supportive of an upward push, and a downward move should suggest that we're either in consolidation or something's wrong, the wrong players. What you don't want to be doing is buying and selling a stock based on what retail participation is doing. Clearly, the Amazon has been driven up by a large amount of buying from the public, but the public is not the world's strong hands, and eventually they're going to get spooked, and they don't have the wherewithal to survive, and they will panic, and they will panic sell into declines just as well as panic chase into rallies. Those are the exact opposite things that a real professional trader wants to follow. You want to follow where the pros are doing. And the pros, I would say it's a downward bias. If it takes out the low and makes fresh lows on the pro index, and again, this is something that you can track. Here inside the matrix, you pull it across and you can see Amazon right here. You click this link and you're going to pull up this chart here. You want to make sure that this, if you're bullish, you do not want to see this generating a new low anytime soon in 2022. But if this trend doesn't reverse, I suspect that's what's going to take place. And it's going to put pressure. Perhaps it's just enough pressure to keep it in a sideways action, but it could be enough to knock out an 84-month uptrend. And once we get a downtrend, I wouldn't want to be long or blindly long, because at that point everything will change. So in terms of the evolution of the trade, Amazon is transitioning. It's been up for a long time. It recognizes it. It's one of the top performers next to Tesla of the stocks that we track, but it's starting to weaken. The downtrend, the daily is down. This could go over and infect the weekly. And if this thing organizes to triple down, don't think for a second that the public-driven rally is not going to betray Amazon and sell off into the weakness and pound those who are the true believers inside not only the Amazon miracle as well as the retail index that no one ever thinks that the American consumer can ever be tapped out. And I caution against that. There, you could go into layers further. I could talk about other things, but again, we're already reaching about 15 minutes on this. This is about as far as I want to go. Again, the play for Amazon is an extended primary trend. It's currently up, which means then you can't short it. You have to wait for the primary trend to turn down. But it is weakening, and if you want to know really why, go back and rewatch this video. If not, this is really how we set up not only Amazon, but the rest of the names inside the matrix. I encourage you guys to come in. We've added a couple fresh names, and we may add some more as the year progresses into 2022. I don't want to commit too much computing resources to do this because it carries a bit, so I'm not going to push 50 names and maybe 15 at the most, and they have to be interesting names and well-defined names. The computer has to recognize them and understand their cycles, so it needs a long-term trading history. But these are important concepts that have been introduced inside the matrix for 2022. So I encourage everyone who's probably subscribed to the regular matrix and everyone who's been participating in the pilot program of the beta test for this company matrix, they probably know what this stuff does. The point is to show it out to the rest of the world that doesn't quite understand yet. And it's much different than you think. The computer follows fractal trends, which means it studies the daily, weekly, monthly. I have other forms of matrix that go beyond that, but it studies them simultaneously. Focus moves tend to happen up or down when all three time frames agree. And that's what it causes. You need to be patient. Anyone who's shorting a trend that's up is crazy. Anyone buying a trend that's currently down is, well, they're not crazy. They're just doing things that are undisciplined. And the whole point of the evolution of the trade and understanding the fractal natures of of composite trends, and that's what we're focusing on right now, is a composite trend. It's just information. You have to understand the three time frames, which is that's what we focus on here, and without it, you're just guessing, and guessing leads to bad trading discipline, and bad trading discipline leads to mistakes and losses. So, if you have any questions, not only on Amazon, but anything else within the company matrix, let us know. We're always here. You can contact us through the website, or you can leave some messages. Now, subscribe to this channel too. We put up some videos here once in a while for free, and these are the types of things we talk about. So, thanks for watching. I hope everyone has a good New Year's Eve and a great 2022. And I think that if you're going to do something different, it's time to look at trends with a new discipline and philosophy. So thanks for watching. We'll talk to you guys real soon.